Hi, Adam here, Financial Traders Cafe. Welcome back. If it's the first time that you've watched any of my videos, welcome. There's plenty on the channel. Today what I'm going to do is talk you through a coaching session I had with Mike. Now Mike is trying to pass the FTMO challenge. He's just paid another application fee for another 140,000 account. I think he has to pay about £940 or something because he's in the UK. So that's what it's costing him to buy 140,000 demo account. He's got to pass the challenge, he's got to make 10%. He no longer has to try and pass that in a month. He can do that over 6 weeks, 2 months, or however long it takes, but ideally he wants to pass it as soon as possible. He can't lose more than 10% of that account or he fails the challenge, and he can't lose more than 5% drawdown on that account in one day. Okay, if he breaches that limit on open trades, closed trades during that day, then he would fail the challenge. So that's the criteria. This time round he really wants to pass, so what I've said to him is, before we even get into the strategy that he's going to use, whether that's a reversion to mean, a reversal strategy, breakout strategy, set and forget strategy, there are so many different strategies, so many different time frames that you can use, and they're all different. It depends on the person, so we go through different strategies to work out which is going to be the best one. But before we can even go into that, what we need to do is look at the numbers in the Trader's Edge formula. This is something that I created. It's something that, when I say the Trader's Edge, this really does give you the edge. This is the formula that you need to really give you every possible chance to pass a challenge, or if you have got a personal account and you're trying to build that up, what it will do is it will help you make more money, but it will also help you avoid losing money, which is a big thing. Some of the trading platform providers are all saying that traders can lose anything from, say, IG, they'll say it's 69%, FX Pro 76%, so the high percentages of people that lose money. So the Trader's Edge formula, what's this about and why do we need to start here before we get into any strategy? What we're looking at is getting that competitive advantage using risk management and correct position sizing. So these are the parameters on the left hand side, and in Mike's case we are putting in an amount of 140,000. They can use a slider to move that along, and his monthly target is 10%, but as I say, it doesn't have to be passed in 1 month. If it takes him 5 weeks, 6 weeks or whatever, that's fine, but as long as he hits this 10%. But he told me today he wants to make 10% in 1 month. Now this is where you have to fit this into the amount of days that you are going to be able to trade for. So in Mike's case, I said, how many days do you want to trade for? How many hours in a day can you trade? Is it half an hour that you can trade in the morning or in the afternoon? Or do you have more time than that? Because that's going to determine the strategy that you use. He does have time available, but he doesn't want to be sat at the screen all the time. I said, how many days though? Give me a number. He told me he was committed to trade for just 12 trading days in the month, so that's a little bit more than 2 weeks. It may be that he would trade on a Monday and a Wednesday, or Monday, Tuesday, Wednesday, and not bother trading on Thursday and Friday. Okay, so you can see how this works. It's scheduling it in to make sure that you trade on the days that you say you're going to trade. So 12 trading days, and I said to him, how many trades are you going to make in a day? and he said 2 some days more. So we'll put in the average there. Let's just look to begin with 2 trades per day. So he would make 24 trades in a month. That's where we start, ideally what he wants to do, and then what we do is we run a number of different simulations. And what I've created here is a way of being able to run infinite simulations, infinite scenarios. And once we have that dialed in, then we can start to schedule in the days he's going to trade and the amount of trades per day and the times of the week that he's going to trade for. It's very, very important. You need to have a plan and be disciplined to follow that plan, that structure. So this is all mechanical, rules based, okay? And this is the difference. This is what will give you the edge, because you know what you need to do, and the psychological impact on this is night and day to what most traders do, which is usually hope trading, and all the numbers are completely sporadic. They're risking different percentages with different amounts on each trade, and it's all over the place. They don't know when to get in, when to get out, where the stop losses are, and it all stems back to here where you create this plan. This is a trading plan, but with the exact numbers. People say, oh, you should have a trading plan. This is a proper trading plan, okay, because it's got all the metrics dialed in here, and you can change any one of these to give you a different outcome. And this is what we're going to look at. So to Mike, okay, what we're going to do, Mike, is 24 trades in a month. So you can see that here. How much are you going to risk per trade? And he said, okay, 1%. I said, let's look at 0.5% first. And what average are you getting at the moment? So if you risk £100 on a trade, are you going to get £200 back? So a 2 to 1, or you're going to get a 3 to 1, or a 4 to 1. Are you going to be day trading? Are you stock trading? Okay, so you've got to decide what you're going to do. If you're going to be day trading, how many hours are you going to be at the screen day trading? How much are you going to risk per trade if you're doing more than, say, 2 trades in a day? But working on these numbers to begin with, he said his risk reward ratio on average is 2 to 1. Okay, now if that's the case and he's risking 0.5%, this means that out of 24 trades in the month, so that's 12 trading days, 2 trades per day on average, to hit his target risk per trade is 0.5% of 140,000, so he's risking £700 on the trade, and his reward is 1,400. And if he's doing 24 trades, he would need to get 15 winning ones, assuming that the reward to risk was 2 to 1. Okay, so that would mean his win rate would need to be 61.1%. That is 15 winning trades out of 24. So if he gets 9 losing trades, that's 9 times 700. So it would show up on his trading statement he's lost 700 quid on each one. So he's not risking any more than £700 per trade. Not 702, not 650, not 1,050, but £700 on each trade. Exactly that. What changes is the amount that he risks per point, and we'll get into that in a bit. So he's risking £700 per trade, and his return would be 1,400. All right. Now, he said, what would need to happen to have a lower win rate? I said to him, if you did 3 trades per day on average, your win rate would only need to be 51.9. Okay, so you'd only need to have 19 winning trades and 17 losing trades. You'd still hit your 10% target, which is 14,000. Your weekly target is 5833. I like breaking things down from monthly to weekly to daily to per trade. So he would need to make £388.89 per trade, which would give him the target of 14,000. Okay, based on those number of trades in the month. So he said, how could I improve that even more? So if you increase, say, the risk per trade to 0.7%, look how that changes. So he's now risking £980 per trade, and he's keeping the risk reward ratio at 2 on average. So now he only needs to get 17 winning trades. So he could get 19 losing trades now just by increasing the amount he puts on per trade, but without then getting into a situation where, imagine if he had 6 losing trades in a row, that would mean that he's getting quite close to drawdown. So does he feel comfortable with that? What if he reduced it to 0.6%? If he reduced that number, then he's risking £840, so he would need 18 winning trades and he'd still have 18 losing ones. He'd still hit his target. What would happen if he increased his reward for the risks that he's taking, and on average he was getting 2.3 to 1? Look at this. His win rate now only needs to be 44%, so 16 winning trades out of 36, so he could get 20 trades that lose and he would still hit his 10% target. Can you see that? All we've done there is we've just changed a couple of numbers and we now have a different scenario. So what happens if he can't get that kind of return? What happens if his average risk reward is 1.8? You can see his win rate is quite reasonable, 52.2, 19 out of 36, so you can afford to get 17 that hit the stop loss, and as long as he gets 19, then he'll hit his target. So he said, do you know what, I think I could probably trade for 15 days in a month. Okay, so let's just change that to 15, and we'll keep the risk per trade at 0.6. Your win rate is 51% required, so 20 winning trades out of 39. What about if he risks slightly more? In fact, let's just say he risks 0.75% of his trading account of this 140,000. Well, now that's changed the number, the risk amount per trade to 1,050. His risk reward ratio 1.8 to 1, so now 1,890. Can you see how just changing anything on this left hand side, this is what gives you the edge? You know exactly what you need to do. What you're doing is you're following mechanical rules. This is a new way to trade. It's taken me quite some time to build all of this, and I've done it because it just changes everything. It is the game changer of all game changers before you even get into the strategy. Okay, and so now Mike has every chance possible of passing the challenge this time round after all the failed previous attempts, which he admits was because he didn't have any structure at all. He was getting into a losing streak and then risking far too much on his next trades when he was already in drawdown, trying to get back to break even again, back up to his 140,000 again. He was just getting deeper and deeper into a hole, which I call the quicksand effect. He's so far in the quicksand that he can't get out of it. Alright, so you don't want to get into that situation. Now I've created a drawdown protector which stops that from happening as well. That's another calculator. Another one I've got on here is the 0 to 1 million blueprint. Okay, how to systematically grow the account. This is another very, very important tool that you can use to see how you can grow your trading account from something small to something very, very sizable. But I just want to focus on this at the moment so you can see this gives you the edge. Now, in finding out your average risk reward ratio, what I've built into this is you add the trades that you have made, or for example today So it's the 2nd of July. So DAX trade, and on that DAX trade it's a short. This is a winning one at 23,892. The stop loss is 23,946, and the take profit target is 23,802. So the stop loss was 54 pips, entry 23,892, and stop loss 54 pips above that entry price on a short. Then the profit was 90 pips. So that means it automatically calculates this, the risk reward ratio. So there's your risk and there's a slightly bigger reward. Now let's just say in this case he decides that he is going to move his stop loss down. So this changes the risk reward ratio. So now if he's looking for 2 to 1, he's still got 45 pips stop loss. So if that does start to go against him, that's his safety net. So he would lose 45 pips there, but his target is double that. And this will calculate the number of trades from what you put in on the right hand side and the win rate. So of course the win rate is much higher. The average risk reward is 2.11, and the edge profit factor is very high here, 6.04, which is really good. So even before you place a trade, you can put these numbers. I have got a position sizer, a really lovely calculator that I built for the whole Trader's Edge suite, and they all do different things. They're all brilliant tools to give you that Trader's Edge. Okay, so if we go back to the Edge calculator again, and so you can see what this is about. It's all about position sizing, risk protection, profit optimization, giving you the winning edge. Alright, and this is a formula. It's a formula that just sets the precedence for success. There's also the Edge tutorial here. This explains what the trading edge formula is, the parameters, the account size, your monthly targets, and what most successful traders would target each month. Never risk more than 2% per trade. That's your trading lifetime. So there's all sorts of great stuff that I've put in here to explain everything, how the formula works, the break-even win rates, moderate edge, strong edge, and powerful edge. So the edge journal, what that does, and then the edge metrics as well. Alright, so that's all there. And so Mike now has this dialed in. He's saying that he's going to trade for 14, so we change that to 14. His trades per day, he says on average he's looking to do 3 trades per day, so that means that he would do 42 trades per month. He's going to day trade, and in fact the risk that he wants to take is 0.6%, and his risk reward ratio before he even goes into the trade is 2 to 1. Now what will happen is, so say if he places a trade and that trade moves in his favor, as soon as it hits his target, which is a 2 to 1 return, he then moves his stop loss up to that level, and if it carries on running and the momentum's strong with the trade, then all he's got to do is just leave it to run. Because the worst case scenario, he knows that he's moved his stop loss up and he's still going to get a 2 to 1 return. So on an £840 risk, which is 0.6% of 140,000, 840 quid, he will get 1,680 worst case scenario. And look at this, he only needs 20 winning trades out of 42. So he suddenly gets 2 losing trades. Oh my god, everybody starts panicking, what are we going to do? No, you only need 20 out of 42, so that's 2 losing trades, it's 2 out of 22 that you can lose. You still hit your target. You are setting everything up correctly when you're going into a trade and you're looking for minimum of 2 to 1 returns. Now, a question he did ask, which is important, is what about some trades where it doesn't quite hit the 2 to 1 target? Do I have to wait? No, you can still close a trade if it hits a target and it's 1.7. We're talking about averages here, so you've got to be sensible that sometimes you have to close a trade, but we need to have a track to run on. Other days you might get a 2.4 to 1 return, higher than the target. That's absolutely fine as well, because what we'll do is we'll be able to average out this. Now we can export the data as well into Excel or CSV file, and that's also useful. But what I said to Mike is that if he does follow this, okay, he has every possible chance of passing the FTMO challenge. I keep him accountable. That's what he's paying me for, to coach him. I will make sure that he is accountable, because if when I look at his numbers he's risked £1,500 on a trade when he's told me he's only going to risk 0.6% per trade, which is a maximum of 840, he's breached the rules, hasn't he? These numbers are all going to be skewed. He can't risk any more than £840. That's the maximum. You can't risk more than that. This is all financial modelling. He's sticking to the rules. I can't risk more than that. Now, if you say, okay, I want to risk 1%, that's fine, but make sure you stick to it. Don't risk any more than that, but also know that if you're risking 1% of your account per trade, you get 5 in a row wrong, and then you're 5% in drawdown. Okay, so you've just got to be aware of that, but the rewards are much bigger, because it means you only need to get 17 out of 42, which is a win rate of 41.3%. You're starting to see how this works now. It is absolutely massive. This is before we get in and look at charts and the different strategies and how you're going to get trades that are going to give you these kinds of returns. But we've got to do this first. This is the starting point, and prior to that we are using the 0 to 1 million blueprint, which is another thing I created as part of the Trader's Edge formula, and this is where you can see how you can compound the accounts up, but I'll go through that another day. Alright, so that's it for today. So Mike's on his way now, and in a few days time we'll start to see some progress. Alright, any comments or questions, then put them in the comments box below. If you like the video, then please like it, and if you do want to try the Trader's Edge formula, there's a 7-day free trial. With all of this, what I do is group coaching once a week, so running through everything, and that is a paid subscription. But if you just want to try this out, you can, and you've got 7 days where it's completely free, and will be a link in the description below. Happy trading, and speak soon.